Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Mark Marex, Director of Index Research and Development at Nasdaq Investment Intelligence, to discuss the Nasdaq Clean Edge Global Green Income Index, which is designed to give investors access to high dividend-yielding players in the green energy and decarbonization space. Mark, it's great to have you with us as always. Welcome back to Trade Talks, and let's start off with an overview of the index and how it's designed.
Thanks, Jill. Good to be with you as always. And excited to be talking about this product, which we launched back in February. And it's the latest expansion of the Nasdaq Clean Edge suite of indexes that got going back all the way back in the mid-2000s. The Clean Edge Green Energy Index we've covered before, as well as the Smart Grid Infrastructure Index. There's a water product, there's a wind energy product as well. And those are all kind of building off of different sub-themes within this broader energy transition that we're embarking upon. And that Clean Edge, as our sort of dedicated research partner on this suite of indexes, keeps really close track of. And so, at some point recently, we got together and started thinking about, how investors are kind of searching more and more for yield and income these days. But there isn't really a product out there on the market that is structured in this way to generate income, to generate high dividends from companies that are playing in this space on the equity side. There's a lot of bond indexes in terms of green bonds and sustainable bonds and things like that. So the fixed income space is well represented, but the equity space really is not. And we saw an opportunity to launch what we think is a pretty unique product here. So what you can see on the first slide, this is sort of a high-level overview of how the index is constructed. As with these other products in the Clean Edge suite, the folks at Clean Edge do the classification of all the companies that are potentially eligible in the universe to be included. So that spans things like utilities in the electric and water space, to waste management, sustainable infrastructure developers and technology companies, even some real estate investment trusts that kind of focus on these spaces. The overarching goal here, just like with the other products, is you have to be deriving at least 50% of your revenue from, generally speaking, renewables or non-emitting sources. In some cases, for some of those utilities, it's based on percentage of power generated, right? At least 50% or more from clean or renewable sources. And there's additional criteria that is kind of specific to some of those water and waste management, or even some of those REIT names. But that is the overall goal, right? It's not just giving you exposure to companies that have ambitious targets 5 or 10 years out in the future, and are doing just a little bit currently in terms of renewables or clean energy. But companies that have already met that 50% threshold. So that's sort of the starting point. And then we layer on all this dividend criteria in terms of you've got to have 3 consecutive years of annual regular dividend payments. You must have had at least 1 regular dividend within the last 12 months. You've got to be net income positive, profitable companies only, and your payout ratio for dividends cannot exceed 100%. And so basically you just rank the universe by highest dividend yield over the past 12 months until you get to 50 names, and there's some buffers built in here in terms of companies that have already made it in during the last rebalance and reconstitution. But that's sort of the goal, is to give you the top 50 yielding names, pretty straightforward market cap weighting, top 5 capped at 8%, rest capped at 4%.
And Mark, what does it look like if you were to break it down by industry?
Yeah, so by industry, it's a pretty concentrated mix in terms of industrials, utilities, and real estate. Those are the big 3 that give you, more than 95% of the exposure. And then when you look at by subsector, you've got, electrical components within industrials, you've got alternative electricity within utilities, and then you've got this kind of catch-all category, other specialty REITs. There's also some office REITs in there, some healthcare REITs. There's some conventional electricity players, some obviously pure play water names as well. So maybe a little bit more diversified on a subsector index, but Those big yielders are kind of less technology focused, unlike something like the Clean Edge Green Energy Index, and more focused on that utility and REIT space where the goal is really the return of capital to shareholders.
And what if you take a look at it by geography and size?
Yeah, so by geography, pretty well diversified, 40% US. You've got exposure to, a handful of European as well as Asian countries in here. You've got Brazil, pretty well diversified mix from a country perspective. From a size perspective, you can see, there's very little small cap exposure here. That yellow bucket under 2 billion market cap is only 2.4% of the index weight. Mid caps are, about 23%. If you sum up the purple and the green, and then the rest is large cap, about 3/4 large cap exposure. So it is, it is tilted towards the larger players in these industries.
And finally, Mark, let's take a look at the top 10 constituents and just how concentrated they are within the index overall.
Yeah, so maybe not the most recognized names here. You don't have a name such as Tesla or some of the other EV names. You don't have Plug Power or some of the other kind of up and coming alternative or renewable energy players. This is really a mixture again of industrials, utilities, and REITs. I would think maybe ABB is the best known name here. It's a big industrial kind of conglomerate based out of Switzerland. And then some REITs in here, some water players, some wind players. 60% of the index weight is going to be your top 10. That's basically just a function of, that 8 and 4 capping that you get. Top 5 companies are always going to be around 40%. And then the next 5 largest are going to be, around 4%. So not too concentrated from the perspective of the top 10, but those are the names that are going to be driving performance most days.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.